Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Eric Shamilov. Good morning, Eric. Crazy markets. I got to say before we get going, like it's funny. S&P futures last night, not last night, 2 nights ago, had us down on the year to the 100-day moving average. Volatility is exploding, and then one day we rally basically 150 handles on air, and the vol is out. Nobody's trading, and they're back to the same shenanigans as 2023, 2024, and 2025, and now 2026. And we're in February. S&P's up, slightly under 2%. I don't know what's so good that freaked everyone out yesterday, but I don't want to spend a lot of time on the equity market. I want to come back to it because that's the market that everybody should be trading, which I said yesterday was silver and gold. And gold's back to 5K. Okay. Silver is up, you know, almost half of what it was down the other day. I know you didn't believe in it, but it's back. And I think it's going to be really good trading. I think you got to be very careful. You can sell a rally, but you got to be very careful because this thing is on steroids. And that's really, if you're trading, that's where the action is. And, it's funny. I'm watching gold trade this morning. I mean, there is massive volume going through at the level where it's trading at near the highs, both buying and selling. So, it's interesting. It's interesting in general. And silver's back to 88 and a half. Yesterday, silver traded 71. So what is that? That's 8 and 9 is 17 on top of that. It's like a 25% rally in not even 2 trading days. So why bother with the S&P 500, which is going to move, if you're lucky, a percent? Like price the straddle now. It's probably under $20. I was looking earlier and it's garbage arena. They don't even think the market could sell off 25 points, which is a little crazy, especially after we moved the way we moved yesterday. So, here we sit. And I don't know what your thoughts are either on precious metals, the equity markets, or any other market, a market that
Well,
I'm
first
looking
of all,
at.
first of all, great call last night. Tip my hat to the master.
Ay,
Uh,
ay, ay.
Larry calls me last night. He's like, "Go long gold right now," and within 5 minutes, it's 100 points higher. So nice call there. I think we differed on. I'm like, okay, this stuff is gonna consolidate first. Usually, after a big move in either direction, you can expect consolidation. And I think gold and silver will consolidate. Like, do you think they're gonna go straight up? I hope they do. I'm positioned that way, but
Well, they are going to consolidate probably from a higher level, but this isn't, listen, we talked about
well,
it
you
on the
said
way up.
yeah, right. So, what is that level where they're going to consolidate? You said
I don't
yesterday
know. You know what? I think
silver's
silver's
going to
going to,
consolidate at a high of around like 91. I think was your level, right?
I don't know. What I am not worried as a trader, thinking about is the move could be more parabolic than what you expect. So what is silver up like 13%? I don't have it. I'm looking at it, but I don't know the percentage, but it's got to be 13, 14%. It was down 35%.
12
So
and a half.
this,
Yeah, 12 and a half
yeah,
percent.
so this thing could do more than what you think, potentially, so maybe the 91 area, 90 area.
We're almost there. We are
I don't know.
almost there.
Can you get a bar on silver? 100, 100. Anyway, just want to, have an arsenal ready just in case. Gold seems to not be able to get above 5K for the moment. Um, but we're right in here, and this is pretty high levels. It'll be interesting to see the volatility on this product once we open this morning.
So, what's your plan with metals right now? Is it like a buyable area
No,
for
I think it's a good trader. I think it's a good trader. I think the vol. I got to see what the vol looks like in the. They're not zero DTE, but they're 1 day options. See what that looks like. See if there's a position to build on in there. But again, the problem in the metal space is no levels are really sacred. We could go to 90 and go up another 5 points and blow people's heads off. I mean, I'm not saying that's going to happen, but that's what I see. But this move, I mean, it's unbelievable. In silver, you were in the 70, almost the 60 handle yesterday, and now you're almost in the 90 handle. So that's movement. The S&P could never move like that for the whole year, plus 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 plus, unless we crash. Unless the
So
S&P.
everyone's attention definitely is in metals right now. A lot of futures traders are, getting sucked into this trade. So, what would you suggest to them from a risk management point of view? Let's say you have whatever account size you have. Like,
I
how
don't
much
know.
would you?
Stay small, and just
What
chop
about
it down.
stops? You know, I think a lot of
Listen, that would all be commiserate to the position. Did you get it? No. Okay. Sell 30 right now. Jesus Christ! And don't butcher the trade. Okay. Anyway, so we're trading metals a little bit. We're hedging out some of our position as we are
I hope
going
Thomas
higher.
has his instructions ready.
Ah,
Bullet point
dude, it's
don't
it,
the trade.
it
Bullet point
reminds
two.
me of the movie Gangs of New York, The Butcher. We're
That was a great
going
character.
straight up, by the way. Okay. Anyway, so that's what I see in metals. And then
So what are you doing at the open with metals? I don't know if you
why?
have positions out there for your product or not.
Okay. What was that?
What are you doing at the open? I don't know if you have positions out for your product
I'm
for the.
long a little bit. We do not in the product. I didn't really think we were going to rally until after 5 o'clock yesterday. I just saw the action. I saw the amount of buying, and it was pretty extreme.
Yeah, it's pretty bullish to see Asia buying this. When on Friday, right off the bat, it started
I
in
know, but
Asia.
you say Asia. It isn't really Asia, dude. When I gave you that trade last night, it was 6:30, way before Asia. Okay, and we were up almost 200, 100 and change. So that trade happened. They just pushed it along. Um, you know, they just pushed it along. But
Why, you don't think they're trading pre-market?
what?
You don't think they're trading pre-market over there?
They could be trading right now. Why aren't they trading right now? Stuff's open all day, all night. So when you say you're the one that says Asia is buying it, why can't Asia buy it right now?
Okay. The pattern the pattern I've noticed is for the past
Ask him for the
15
buy.
months really is strength coming out of Asia. Everybody
What?
walks in the door at 9:30. Gold is already up, and usually there's weakness in the US
We
market.
have nothing in our
Usually
account.
that's the usual pattern. So when I see Asia
You
selling,
can't get
I
anything.
get, that's a red flag for me. And on Friday that's exactly what happened. It was Asia selling, and then we got that huge uh, destruction of the precious metal market. So you think retail is out? You think they're still
In what?
in gold
In
and silver?
Yeah, they're 100% in.
They're still in. Okay.
Just forget it. Dude, I don't know.
Are you multitasking?
What?
Are you multitasking?
Yeah, I'm trying to do something, and I got the Guy in here, everything's no, except it's always yes. I don't know. It's a literally unbelievable thing. But I don't know. What do you what's on my mind a little bit here is the bond market. Okay, no one's really focusing in on bond market, and bond market's having a lot of trouble um, this morning. Just in general, not really this morning, but just in general. Back to 430 on the yield, Eric. Nobody cares. Nobody cares, dude. Just buy S&Ps. Woo! Buy them. They never go down. Just buy them. I mean, at some point, it's gonna come back to roost on people. So that's what I would say. I'm very concerned about
I was
bond yield.
happy with the Palantir earnings report. Maybe that's
Nah,
giving the
dude.
Nasdaq some temporary.
Talk about a
Some.
fraud of frauds, dude.
I
140
was
or
watching. I was watching
135
the.
times earnings, and they love the number.
Yeah, the guy talks a little too much. Alex Carp. I
Yeah,
was
he's a
watching
ragged little guy.
the
He's
telecast yesterday. I was a little bit
You want
unimpressed,
him
but
driving your car. I mean, gold is creeping up to 5K as we speak. I think on the air we may get a 5K print. Uh, back,
nice.
back on, back on. Only like 14% from an all-time high. They'll get that by tomorrow. Dude, this is
Larry has joined the dark side.
no. I'm
He's
not.
now
I'm not on the
a
dark side.
resident gold bull.
Eric. All I'm saying is, why would anyone bother with S&P? Why? You could buy gold right now, make 2% in a very short time,
Come
or
on,
have it
man.
move two
You've
percent.
been in this business for 40 years. You're
Yes.
only talking about the upside of the trade. What can you lose on the trade?
What are you
Gold
talking
is
about? I'm
moving
not talking about the
150 points
upside.
up
What are
and
you
down.
talking about? I'm not talking about the upside of the trade at all. I'm talking about both sides. I'm talking about the movement of the trade. I'm not
Yeah, if you
saying it's
get it
going
wrong,
up.
you're down, a nice amount.
Well, then
So
you
it's
got
all
to trade inside your realm. It doesn't matter what you're trading. I mean, what would you rather trade? S&P futures that don't move and have a straddle at $20, or do you want to trade gold where you can buy gold here, okay, and be forgiven, and you could sell gold here and probably be forgiven. Okay, a market that goes up and down. What we used to have in S&P till your son took over the market from the room behind where you're trading with some algorithm that's attached to his video game. Okay, and he's making the market move off of. Dude, this is a video game. The
one would
S&P
all.
is just a video game. Video game. It's a total video game. That's all it is. They get the sell button, the buy button. And the funny thing is, the reason why it's harder to get an upside acceleration in S&P today is because no one's short. Because everyone got short yesterday on the move back up because the move was a two, as you would say, a 2 sigma move or a little bit more. So they gammetize people. When they can't gammetize people, they can't move the market. You know that. But here we sit. Um,
So I got a question for you. I know you don't want to talk about the S&P 500, but you mentioned 1 sigma, 2 sigma. S&P is up half a sigma. That's a half a standard deviation right at the open here. Is this a full standard deviation day for the S&P? Do you
dude,
think?
it's 5 standard deviations, 10. What, dude? It's a zero, bro. S&P is a non-trade. They don't care.
So
Dude, listen to me, bonds are about to tick over 430. Nobody cares, Eric.
no one
Nobody
cares.
cares. No, they don't care. And what happened to Warsh? Warsh was rolling off the balance sheet. He's a hawk. I mean, come on, dude. It's
That
all
was the dumbest
noise.
reaction I've ever seen.
My
And
buddy's calling me, telling me Warsh is, this, that. And the funny thing about it is he's not even in for 4 more months. So
so
whatever he is today is irrelevant to what the market's gonna do. They got 3 months minimum or 4 to prepare. And if Trump doesn't drop the lawsuit against Powell, this guy's not even gonna be put into office. Okay, so he has to drop all of the stuff he's doing with Powell to get this guy in. So who knows what's going to happen 3 or 4 months down the road, but you can't really worry about it. And as I was thinking about it, think about this. Everyone said on Friday, first of all, Friday was a massive options expiration day for gold and silver, massive volumes. Okay, so think about this for a second. Everyone blamed Warsh, right, for the sell-off.
Yes.
Oh, Warsh. Well, silver's up 15% today. It's the same Warsh. Now they don't care about him.
Well, that's good that you mentioned that. I was going to say, like, how crazy is the market that was the trigger? At least people are saying that's the trigger, and
It
that
was so not the trigger.
trigger,
It was.
right?
It
'Cause
was.
it's
It.
option,
It.
and the rest of the market's already retraced that whole reaction. S&P retraced, bonds retraced it like 10 times.
No, bonds
Currencies
are horrible,
retraced it.
dude. Bonds are horrible. I know you have this love affinity for the last 6 months in bonds, like that. You think
Yeah, I
they're
think the
going.
back end of the curve should, uh, you know, I think bonds should rally in the back end, but it's not happening. So I'm not
Why do you
pressing.
think that? But why do you think that? Why do you think that?
Um, I think that because AI has been two reasons. AI has been dominating GDP last year. So GDP is in the mid fours. You look at GDP now, it's even higher. So
Can I
these are
call a time?
pretty
Can I call a
healthy.
timeout? Can I just
Oh,
call?
not yet. Not yet. No,
Well, I
not
just
yet.
want
You
to
can't.
say something about the just one
Don't
thing.
say anything. Okay,
Why?
go ahead.
I'm telling you, the numbers are not real. No one's looking at any of the numbers. You're looking at GDP. It's a fake bullshit number, the same way CPI is, the same way everything is. You haven't looked at a number that is printed at 830 in months. Okay. We haven't talked about it on air. None of these numbers mean anything. But go ahead. Sorry. I just wanted to throw in that the numbers don't mean anything. So go
We
ahead.
know you.
GDP's,
All these
what is it?
numbers
What do
are
you think GDP is? 7%, 9%, 15%? What do you
according
think
to
it
the
is?
according to the official tally. I think it's in the mid fours, right? That's what they're saying. Look, I agree that government data is flawed. We all know that. So why even mention it? We all know that.
Exactly. That's why I was trying to stop you from mentioning it.
But
But go ahead.
these are the numbers everyone's going by, so you're forced to look at them anyway. So the point is we've had really strong GDP numbers come out, right? I'm seeing
So why is
now,
that good for the bond market? If we have
but
strong
that's what
numbers,
held
bonds
up.
should back up.
The reason GDP's been up like that is because AI has been dominating that number with like you look at the performance of Caterpillar, all the data center build outs, that's a lot of jobs, that's a lot of money flowing through the system. But what we've seen in the stock market last 4 or 5 months is an exodus from all these trades. They've lost leadership in a lot of areas. So if that slows down even a tad, if unemployment rate goes up even a tad, then I'm thinking rates should come in. Like the conversation towards mid-year is probably going to turn to when are we cutting rates again? You know, it's not going to take a lot for GDP to come off a little bit, and you get 2 quarters of that. Even if GDP is still going to be strong, but coming off a high level, people are going to be worried about that.
I I don't I don't understand actually the logic of what you're saying the numbers are hot. Okay. GDP is hot. Okay. All these numbers are really, really strong. That would actually mean the Fed has zero control of the long end of the curve and they can try to, keep the short end, going lower by cutting rates. But you're going to see the most massive steepening curve. And especially if this guy wants to roll off the balance sheet or, get rid of debt, they're going to have to issue more debt, of which no longer is China really buying our debt. Okay. And Europe may be a little bit, but not a lot. They're pissed off that we, basically treated them like shit on their own turf. Um, so I'm not, I don't see it the way you
The
do.
risk
I
to that
actually,
idea, I think out of everything you said, the risk to that idea is like the market isn't reflexively buying bonds when when there's some volatility out there the way that they used to. There's definitely not as much of a bid, it feels like, when.
Dude, there is no bid. Listen, think about this, Eric. There's a flight. Like, okay, let's say Trump decides again, the meeting that they're having with Iran went bad or whatever, and they're going to bomb Iran. I'm just making up a scenario. The people aren't buying. Back in the day, the bond would be up two sticks, 2 points, and everything on the curve would be up, right? But now, what's the first thing they do if there is a war coming in Iran or some negative news or whatever? They buy gold. They, they buy
Buying
gold and
gold.
silver. They're not buying bonds. Bonds are
Yeah,
the
gold
worst.
has. Yeah, so that's a big narrative that gold is kind of replacing what treasuries were. Uh, but there's also a narrative where it's not just the U.S. It's global. Like it's everybody's bonds, everybody's currency. It's gold. It's not just gold versus USD. It's gold versus every currency, every bond out there globally. It's like the central banks
Yeah,
don't
but if
trust.
you look at bonds across the world, they're getting laser tagged. I mean, all these bonds are backing up massively. We've actually held up fairly better than definitely Japan and certainly parts of Europe. So I think bonds. I know people, I feel like it's funny when I say something that's not happening in the moment. People like are throwing stuff at the screen like they did in gold and silver, and Bitcoin and all the things that I went crazy about. I'm not going crazy yet about this trade, but the bottom line is this trade, I believe, will be a catalyst for a fairly significant correction, you know, as short a time as a couple of months. Um, you know, so that's what I would say. The bond trade is going to get everybody in a tizzy. Um, you know, and it doesn't make any sense. Um, you know, right now.
All right. So you think gold hit a high for the day? Did we go back short?
Hello.
What's the plan today? What
What?
is what is the plan today for
Holy
SPX?
shit.
What do you got?
Zero. I zero. Zero.
Are we going to open
Zero.
up? It looks like we're going to make a move towards 7,000 again. I don't know. Where'd you say the straddle was at, like 20? It's at 25, 22, 25.
Well, you're waiting and it came in. Forget it. Um, where's the straddle? 24, 22, 20?
22.
That's
It's
horrendous.
higher than 20.
Hmm?
It's higher than 20.
Dude, that's actually, honestly, out of everything, that's embarrassing. That's an embarrassing straddle. That's embarrassing. Dude, you were wanting to sell a $40 one yesterday. They rammed it up our you know what if you sold that straddle.
Sure did. I
I
was
got lucky
definitely off.
yesterday for our subscribers out there. We sold a call spread that actually got right into the money and then ended up out of the money. We waited for the big rally and then we sold. Today, I would sell upside. I think, listen, yesterday's move is bizarre. It's a bizarre move, and it all is caused by gamma, basically options going through the money, So, you know, I'll tell you something funny. The QQQ is at 629 and change, right? Last morning at 5 in the morning, you know where Q was? 612. 612. Literally trading because it trades overnight, on Robinhood and Interactive. 612. That's up 17 points. You're talking about like almost a little over almost a 3% move on air for no reason whatsoever. And they had this market. Do you think I'm wrong? They had the market on the ropes coming in. Dude, puts the cash index was at 68, let's say 90, okay? No, I'm sorry, it was lower than that. 68.40, okay? 68.40, the 6,700 puts overnight were like $5. Now you look down 20 points from where we are and the puts are $2. It's crazy. They were
It's the same
140
thing
out.
yesterday.
In
Yeah,
one
it's
day, this has all changed. How does it all change in one day?
I don't know. I feel like like you saw gold and the market ticking together at various points on the overnight. I think I almost feel like the market was trying to sniff out if this is, you know, a contagion of some sort, and maybe when they realized it wasn't, that was
Contagion? What do you do to get a 1% correction? You need a contagion? I mean, listen, you talk about the issues. This is the problem, dude.
gold fell
This
pretty
is
hard in one day, man.
Dude, right. And you never thought it was going to happen. You literally were like, yeah, 5% dip, 10% dip. And then all of a sudden last night I'd call you to tell you to buy it. You would think you saw a shadow of a ghost. You're like,
You
I
realize I
can't
had
buy it.
SLP,
We're going to consolidate. We're going to consolidate.
dude. You realize I had SLV puts on Friday, right? Going into Friday, you do realize
Okay.
that.
Dude, are you patting yourself on the back? You did good.
No,
You did
you're
good. You are a
you're
great
doing what you
trader.
do. I gotta set the record straight, but you do
Dude,
what
what
you
does
do.
the record have to do with yesterday? I went and told you that I thought that this looked like for a trade, like now at these levels, I mean, gold should go to 5,100 and then maybe shake some shorts. But at this level, you didn't really have interest and you believed, which listen,
No,
you're
I
always
still
right and
have
wrong
it.
that we're going to consolidate. There's no
Yeah, I still think that. Yeah, I still think that. I
Well, we
still think
didn't consolidate. We just rallied 10%. So there's no consolidation. Okay. We may consolidate at a higher level, but right
well,
now
it
we're
depends
not
how you look at it.
consolidating.
Well, if
Dude,
you look at it over a rolling, like, 24, 48 hour window, we've been at this level.
dude, this market can blow your head off. That's all you got to know. Out of any market, this market could blow your head off. Meaning it could go, like I'm looking, potentially at 5,100 to maybe, put a little bit of a short on, but I don't feel that comfortable because this market can do, it can go right back to the high. I'm not saying it will, it shouldn't, but this market is so crazy that it could. And anyone that had to sell has to sell. And let me tell the people that are watching here today, here's the problem. Okay. At 1 o'clock, these ETFs have to rebalance. Okay. Long ETFs, short ETFs. Okay. So the last 2 days at 1 o'clock, there was massive volume coming through in the actual futures, in the ETFs. They had to lighten down the load. You know what they have to do today, Eric? At 1 o'clock? What do you think they have to do
Uh,
today?
I'm not sure. The whole premise seems a little big because
What are you talking
1 o'clock is
about?
the.
They have to buy. They have to buy because they need to get on the gamma for the double leveraged ETFs to basically sustain the moves. So when they have inflows of capital, when the market moves outsized, they have to adjust. So like the long double leveraged ETF right now doesn't have enough gold in it. Okay. Doesn't have enough gold, or the silver ETF doesn't have enough silver, okay, to keep up with that move. Okay. And the short silver ETF, ZSL, has to basically buy back their short futures to get in line with the movement. So this is what you got. Okay. I'm not saying, it's far from 1 o'clock right now, but if we're extensively up, you're going to see massive volume come in. And that's what's happened
You
over
know
the
what
last
trade I
few
really
days.
like? Yeah, I'm glad you mentioned 1 o'clock for gold. Uh, that's the COMEX close. So there's a lot of movement around that time.
Well, no, these
And
these ETFs have to reweight before 2 o'clock because either they have a 1 o'clock cutoff or a 2 o'clock cutoff, and the way ETFs work is you have creation units or redemption units. So when inflows are coming in, you get creation units, which means you have to replicate your position. If you have redemption units, you have to take down your position. So in the last 2 days in gold and silver, they had massive redemption units, which meant they manually have to get out of these positions. It's not what they want to do, it's what they have to do. So today, let's say if
mechanic.
gold is up here or higher, you're going to see massive buying. It has to happen. Those are things that have to happen. So, if you want to get short, you could get short here if you want to, but the best time to get short is like between 1 and 115, and then you'll see it die down. Like yesterday, I got a call from a buddy at 1 o'clock, and he's like, it looks like, all of what they needed to do was done, and maybe the market should stabilize. So I tell you
Right.
today,
So yeah, that time is usually good reversion time, 1 to 2 o'clock. That's what I've been seeing. I don't know if
dude,
that's what
this
you're
is,
seeing.
but you're looking at it like a trade, like you do this is nothing to do with a trade you're doing manually. This has to
Well, you're
do.
reacting to the mechanical ETF
Right. This is
dynamic.
what has to happen. So, like, the more volume you see in these products and the more upward movement, the more they're going to have to chase it. So that exacerbates the move. Okay. Again, it's too early. We're not looking at that trade this moment in time, but that's a trade that you certainly want to look at.
Yeah, I love trades like that where there's a time component to it. You could turn on that trade. You know when you're looking for it. You don't have to. It's like already knowing where the needle is in the haystack, and just going to. You know what I mean? Like it's. I like trades like that, and they're easy to model. Also, easy to automate and backtest because you know exactly where the needle is. Yeah, I like
Right.
trades like that. That's why I love
I don't
trading.
know. I don't know what it's going to do. It could be met by selling. Anything could happen. I think it's interesting. I've been watching
Oh,
gold.
trade like that? What do you mean? You could build a literally like a whole trading desk just around that one trade. Like the whole trading desk can just take off until 1 o'clock, come in and just do that trade. You know what I mean? Like trades like that.
Yeah, but
That
sometimes that trade will move the market and other times it may not. How do you know? You don't know.
you don't know, but you could say, well, my expectation is 80% of the time there's going to be movement.
I got to
You know,
tell you, I mean, I've been watching gold for the last, let's say it's 9 o'clock for the last 4 hours, 3.5 hours, let's say. Gold hasn't moved more than $20 in the last 3.5 hours. It's just sitting at 49.50 with massive volumes going through, just back and forth. And, I think there's probably
yeah,
a
back
run.
and forth 50 points, back and forth 50 points. That's
No, it's
a
not. There hasn't been a 50-point move since I've been awake. Okay. We didn't trade below 4,900 and we haven't traded 5,000. We're trading in a $20 range size. I'm telling you, I'm watching it size. Most of the volume's coming in at 49.50, which probably means there's another leg up because anyone that needed to sell is getting out now, the longs that want to sell here. And then there's a batch of either short covering or new longs. But right around here, now we're trading a little bit lower, we're 49.40, 45. But since we've been on the podcast, it's been between 49.40 and 49.65 the whole time. So it's weird on a $250 or $300 move that we're not even moving 20 points, and there's really a lot of volume going through. at these levels. So it's going to be interesting to see. Probably, you know what I kind of think an up leg potentially here, and then I'm a little like I want to sell it. Like I'm sitting here going, you know what, I want to sell it, but it may go a little bit farther than people expect. And then every firm on Wall Street has been coming out bullish gold. I mean, I've never seen anything. They could care less about a 20% correction, silver a 35% correction. They're coming out bullish. UBS, Morgan Stanley, someone today said 8,000 or whatever. I mean, what do you make of that? That there's just like a blatant disregard for A, what has happened in the market, and B, where the price actually is. And what's funny
I
is
think a lot of people just think this is a secular trend that a lot of people missed, and they're looking at this dip like, okay, it's my chance to get back on that train.
yeah, but let me ask you a question. We've been, you're Mr. Gold, okay? We've been talking about gold since 2,500, 2,300, and that hasn't been more than a year and a half to 2 years. I mean, this thing has already doubled, and now they're it's almost like they're leading the lamb to slaughter or whatever. They don't care. They're part of the problem. And then you shift back to, let's say, the S&P, right? And the S&P, there is just a blatant disregard for risk in the S&P. There's just a blatant disregard. You have one market that if it moves 1.5%, people are blown out the door, right? And then you have another market who like could move 15% every single day. I mean, literally. So
But
why?
you say blatant disregard for risk. I understand where you're coming from, but the fact that I know you blame retail, but I don't think they could actually make the market move in a macro. They'll shake
Dude,
it in the
that's
short.
actually the funniest thing I ever heard. Okay, we're okay. I know they can't do it. You're right.
You
They
can't
didn't do
blame
it. You're
retail for
right. They
everything.
didn't do it. You're right. They didn't do it.
But
It was
but,
the
but what is the risk? What is
institutional.
the blatant risk out there? It's like if there was risk,
Eric,
wouldn't
but you're
wouldn't
making a statement that retail didn't do it, and retail did it. We showed it. We actually had the trade going on in full motion when it was going on. Okay, by showing everyone out there that an ETF that traded 10 million average is trading 450 million average. That's not institutional investor. Dude, there is no hedge fund that can buy that much. You don't understand. These guys dwarf hedge funds, dwarf it. I ran a hedge fund with $1 billion in it. I couldn't do the volumes that are going on here, not even 1/100th. So the reason why, think about it. I'm one guy in Boca Raton. Doesn't matter that I have a ton of money. I can't put that much risk and exposure into my book. But if there is 8,000 million guys buying a micro mini, what do you think happens? How do you think this is not retail? We're back to this thing. You think this is an institutional move?
I think they're allowed to play when there's really nothing going on, you know. But when there's like big things happening in the market that are gonna really move stuff, like really move
Are
stuff,
you really
then
saying this?
I don't think
Honestly.
they're a.
Are you
I
really?
don't.
You know what, dude? I love you. You're really saying this. You're saying
Yeah,
that this was an institutional move.
I think it started as an institutional move.
When?
I
two
think
years ago?
retail got
Two
wind of
years
momentum,
ago?
and then like flies to shit, they came.
Eric, but that's when the price went from 48 to 120. Was all
And then
retail.
what got them out was not retail. Like what got
Got
them
them
out was
out. You think they're out?
the institutional hammer
Do you think that they're out?
came down
I'm
on
I'm
them.
asking, do you think retail is out? I'm just asking what you think. You think some guy bought it at 120 in 2 days it went to 70 and he got out? Dude, they're
I
never
hope he
selling.
got out before that.
Dude, they're never selling, Eric. You don't understand the animal. It's a different animal. They
Yeah,
don't
they don't.
care. They don't
They
open
don't.
the statement. They
But
pray.
I'll tell you what, when there's upside volatility, they have the same look in their eyes that you do when there's downside volatility.
Dude, but we're
So
like
you
off
guys
the
are the same
subject.
side of the same coin. I mean, the opposite side of the same coin.
Why do you say that?
Because they have the same look in their
I'm
eyes
both
when
ways. I happen to be long the commodity
you
today.
go down,
I
you have
happen to
the same.
be long the commodity today. Okay? So what are you saying? Sometimes I'm short, sometimes I'm long. This trade set up for me. This is a perfect mean reversion trade. Overextension on high volume, okay? Down on the lows. Now, could it have gone lower? Of course it could have, but the amount of the move, listen, I'm praying the S&P does that. I'm looking at
It
the
will.
bond market as we speak, and it's ticking lower and lower and lower. And nobody, if you asked any trader that's sitting up there that's not professional, like me and you or whatever, that's looking at macros, some maniac at one of these firms, okay? You think they're looking at the bond market? Do you think they care? No.
I don't even think they know what the bond market is.
What? I'm just saying, bond market is at 430 on the yield. This is the higher levels. And no, honestly, Eric, no one cares. Nobody cares. They got a $20 straddle. You don't think that's the most disrespect that you've ever seen on a $7,000 product? $7,000. A 1% move is 4x where the
Yeah,
straddle is today.
that's
4x.
why. Yeah. So you can't, like, I'm not trying to sell out of the money, call spreads, put spreads today. I'm
I'm
looking
just
for.
saying they're probably okay because we don't move. The only reason why we had an extreme move yesterday is because we opened down so much and they gammaed everybody out of the building. Now no one has gamma. Okay. I have very small positions. Okay. Because I haven't even started yet because we haven't had a move. Okay. So, I'm not even in it. So they can't gamma me or any of my friends because we're not in it. I'm not short. Okay. So the bottom line is we have nothing. So that's what I'm trying to say, that you don't find that a $20 straddle on a $7,000 instrument is not insane, how low that is. I'm just saying, and why is it $20 today and yesterday it was 45? Like what, they've decided on February 3rd that there's no trading today? Dude, that's
Man,
telling you there's no trading,
the
right?
VIX got smashed yesterday. It got smashed. But it got
What do
smashed,
you mean
but
it got smashed? It's higher than where it started the year. So whatever, it got smashed.
right. Right. It's higher. It
No,
got
but
smashed,
the
but
bigger thing that
higher
we need,
than
the bigger thing we need to talk about is how VIX went from 16 to 20 on a 1% down move in the S&P overnight.
yeah,
Literally,
that's
the
pretty.
S&P was down a little over 1%, and volatility went up
Yeah.
25% before the opening. This
So what's going
market is
on
a
with it?
joke. The S&P is a
Why is
joke
that happening, do you think?
because the
That's
market's a
that's a
joke.
really
There's a
interesting thing.
massive there's a massive disrespect for the market and the fact that the market could never go down. That's, to be honest, if you want to know in a nutshell, that's what it is. You ask me, that's what it is. It's a massive disrespect. Okay. And the funny thing is, the only way we could get started to the downside today is if a lot of people sell put options. If people are selling this $20 straddle, then you can get moving. But I don't know who's selling a $20 straddle. They don't want to buy any options. None. They don't want to buy anything. And that happened yesterday at 10:30 or 11 o'clock in the afternoon. They just took the vol out. If you look at the inherent vol today, it's probably 5 on S&P. It ain't 16. This is not a 16 vol. But my question to you is, why can't the S&P go down 1%? Does that seem like a lot? I'm asking you. Does that really seem to you like a lot?
No.
Right. So, like, I don't understand. That's 70 handles. That would make your option that you bought at $2 go to 20 on a 1% move. That,
Yeah.
I mean, that's the disrespect. No?
That's why I'm not looking. I'm not selling anything out of the money. I'm
I know,
looking
but
to sell.
yesterday at a $40 straddle, you wanted to sell it.
I did. That trade didn't work, but when that
No,
trade
I know
works,
that, but I'm just saying it's these trades,
all,
you to do these trades, time out, to do these trades, okay? I used to come out at 9:32 with my put or call what I want to do, because I felt like there was a lot of decay in the options because the straddles were higher. Right now, the straddles are so low, I'm not even thinking about anything till 10 o'clock, till I can figure out what I potentially think is a direction in the market moving forward. So, that's what I would say, about that.
do you want to know
And
what I have on right now?
what?
You want to know what I have on right now?
I know you have some gold butterfly 2 months from now. What else?
Yeah, that I have. But I have a in the money iron condor. So that's a 69.70 by 80 in the money call spread, and then a 60 by 50 put spread finance.
Okay, so you're basically short the wings.
Yeah, but I paid well. I got my max risk on that is $1.50
Right.
to make eight. That's what I'm looking for when vol gets like this, because only a 10, 15 point move in my direction gets me like $4 a premium on that trade.
Hmm.
Like I don't even mess with out of the money when straddles are at 20. Palantir is up on earnings.
Yeah, that's
You
uh
know,
that's a fraud of all frauds. We
so
actually bought some.
you getting short here? Is this an
No, we bought some
opportunity
put spreads
on
in.
a short?
We bought some put spreads into earnings for like $1, and they went to zero. Small. Don't have any upside exposure. I think the stock's a 10-star short.
Yeah.
You know. So that's
Yeah, I'm probably going to be
no
buying
for me.
some March puts on
Right.
Palantir. I got the hell out of my puts before the earnings report yesterday.
Good trade, young man. Good trade. So
Now that puts me in a position to re up on a short.
we're a couple of minutes before the opening. I want to wrap in the next 2 minutes because I want to give people time to get ready. We discussed the gold and silver. Be careful on the upside. It may go farther. Watch for 1 o'clock. Straddle, I believe we both decided is ridiculous. The S&P itself, to me, is ridiculous. I mean, if we came in where we were overnight, this market would be down on the year and people would be freaking out. Somehow they miraculously pulled some, I don't even know if you call it a rabbit. It was bigger than a rabbit. They pulled a human out of a hat to save the market. And then what ends up happening is even guys like me have 1x2 spreads and, short, premium, and then they ram it up our what. And like a guy like me, I'm a put seller then all day long. And that causes the market to go up even more. But right now, I'm believing like I have no upside really exposure and I have no downside exposure. I can't put like I want to trade today, but I can't even really put positions on because we're looking at 1x2s. We're looking at they're all zero. And I don't know why everybody is so complacent on February 3rd that the market is going to stay inside a $20 range, you know? I mean, that's what I don't understand. Do you really
because of
believe it's going to stay in a $20 range today for
because
the
of
whole day?
Palantir.
What?
It's because of Palantir. They're happy about Palantir.
Yeah, but Nasdaq looks much weaker than anything. Like
Yeah,
Nasdaq. So you think Palantir going up 15 is moving the QQQ? Not a chance. And
and that's
Palantir and Pat timeout. Palantir is so outside the AI trade. They're a government contractor. I mean, that's all they are. Okay. And when Trump loses the midterms, that stock is going to suffer like nobody's business. Okay. Because they're going to pull back these contracts. And the stock, I mean, I don't know this factually. Maybe you could back it up with some fact, is trading at like 24 times revenue. Okay, revenue. So it's a $300 billion company or more trading at like 24 times revenue, not earnings. So I know it's an amazing company, blah, 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 blah. But maybe at some point someone has to look at that. So, we'll see. But right now, not a lot going on in the market. We're going to sell Palantir if it comes in. Not going to touch it if it's, staying here. Um, and and here we sit. The Nasdaq future hasn't moved $40 the whole morning. So here we sit. Market's opening up. The question is, can we have a real trade today, or is it just another day of the same? You know, and you know, you're looking at volatility at 16. Is where's VIX? 16, 15. The inherent zero DTE vol is 5, maybe 5. So there's zero volatility and lack of respect for options and lack of ownership. No one wants to own them. So we'll see. If the market can hold up. Yesterday was a miracle trade. We're now February 3rd, and there's no trading in the market. Same type of thing. I think bond yield is really the key. Keep an eye on bond yield. It's gonna matter. It's gonna matter this year. It's gonna matter. I think we go to 4.5 quickly here, from 4.25 to maybe 4.5. There's some level that matters, but I'll tell you, for me, having kids, that are looking to buy homes, the mortgage rates are so high, they're like out of the market. They can't even buy a house because rates are so high. They're like, 6 and 7, 8, 7 on a 30-year. I mean, literally, you could have done a 30-year 3 years ago at 2.
and the,
So
the other people that already own a home but have financed it with much lower rates, that disincentivizes them to buy a new home because then they gotta.
why would they ever buy a new home? If you bought a home and you have a 2% mortgage rate, okay, why would you ever move? That's the
It's
golden
interesting.
ticket.
We talked about this. 30-year mortgage rates are in a nice downtrend, but U.S. Treasury yields are in an uptrend, or at
Why do
least
you
not
say that?
falling.
I don't see mortgage rates coming in a lot at all. I mean, they're sky
You
high.
don't see a downtrend in mortgage rates. You don't see that.
Nah, not by any significant number. No, I mean we're
Well,
looking around.
I guess tomorrow, we'll pull up the charts tomorrow, but they're looking like alligator jaws, actually. So
I don't know how. I mean, the actual rates have not moved. The bond yield has been between 4.30 and 4%, basically. It spent a little time under 4% for the last 5 months. So where the hell is, I mean, you haven't even had a quarter basis point. Now you're a little higher, but from high to low, you're talking about 30 bips. I mean, this is a dead trade. It's almost like the currency trade. It's, you got to pick your spots. But anyway, 5 minutes. I said that we were going to wrap in, 5 minutes ago. So I think we got everybody clear here on the trades. Be careful in S&P. I think the disregard is at epic levels. So it may come in here and hurt some people. Do not get caught. Do not mess with a $20 straddle. And I wish everybody luck trading today. I don't know if you have anything to add, but I'm pretty done.
have a great day, everyone.